And we're going to talk about this trading a long squeeze, but we're also going to look at live markets. So stay at the end, and I'll show you exactly how to utilize this in the present market circumstance. Well, what we're going to talk about today is, what's on the agenda in terms of, what is a long squeeze? As I said, some of you may be aware of it, others may be not. It might be completely new. We'll talk about, how do we identify them on charts? Okay, what do we need to look for? Okay, that gives a little bit of a hint, and what do we actually need to be aware of with a long squeeze? Okay, what are the things that would help you be able to sort of turn them from a threat into an opportunity? And that's what we're trying to do here, to basically just give you the idea and the introduction to be able to sort of turn them from being a threat to an opportunity. And as I said, we'll have a little look at some long squeezes that we've seen in the markets, okay, over the last couple of weeks and months. So stay with us till the end, because I appreciate it's always fantastic, to do the educational bit, but for you to be able to see how it applies and how it looks in the real markets is always beneficial to you. You might also see that there's a little poll running there for those of you joining us here today in terms of just, that's about the length of the webinars that we do. If you'd be kind enough just to ping away on that, what you think of in terms of the times, whether we could, whether this is the kind of right time frame sort of that we deliver our webinars in, or whether it'd be better for them to be shorter or longer, please, any of the feedback is really well appreciated. So, Ronald says that, I've mostly heard about short squeezes. That's good to hear, Ronald. Okay, we did a piece on those earlier in the webinar series. Okay, as always, you'll find that available in the webinar archive. So please make sure that you can pick up on that and sort of go through to that. Ifaloa says, it's new to me too, and that's absolutely fine. Okay, that's what we're here for. We're here to educate you, as I said, so we can hopefully help you turn it in from a threat to an opportunity. So as always, if you've never joined us before, okay, my name's Paul. I've traded for many years. All right, okay. Primarily, I like to focus on trading FX indices and commodities. For my sort of swing and position trades, I tend to be a trend trader, and I tend to be a reversal and mean reversion trader for intraday. That's the way I like to operate. And here at Admiral Markets, as you can see, we provide a wide range of financial instruments. You can see that we're licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular products, and allowing you the opportunity to engage with markets from both MT4 and MT5. And if you have any questions about that, please get in touch with your account representative, and they'll be very happy to help guide you. But today, as always, ladies and gentlemen, we want to focus on what we're going to talk about, okay, about how to trade a long squeeze. So, I suppose for all of you here joining us today, do you actually know what a market long squeeze is? Is it something that you've just heard people talk about, but you actually have absolutely no idea what it entails or what it involves? And that's absolutely fine, because that's what these sessions are for. These sessions are here to help educate you, to help give you the little bit of insight and understanding to sort of broaden your range of knowledge and experience of financial markets. If you do know what a long squeeze is, well, do you know how to trade it? All right. Do you have experience of such? Is there ones that you know and can sort of talk about that you've seen and engaged with over your own sort of trading journey? As it says that understanding and knowing this trade setup can help you engage more successfully in markets, and that's a double-edged sword in the sense that it can also help you engage more successfully in markets, but equally, it can also help you sort of step aside or avoid squeeze setups when they're occurring, when you start to have an understanding of what is going on in those markets, and that equally can be very, very beneficial for you. Okay, Sometimes it is better to sit on the sidelines and miss it out if you don't understand what's happening, or if you can see that there is a bit of a trap being set out. So in this session, okay, we're going to give you an introduction to how to trade long squeezes, so that you can learn everything you need to know, like how to spot one in your charts, what happens during and after one, and how you can trade them yourself. And as I said, we'll look at them on live markets at the end of the session, so please stay with us. That will always help you to sort of just see what it looks like on a live market chart. So, as I said, we're talking about, well, what is a long squeeze? Okay, it sounds great, but what actually does that mean, Paul? Well, not unsurprisingly, a long squeeze is the opposite of a short squeeze, which we covered recently. As I said before, it's a case of, have a look in the webinar archive and you'll find the video on short squeezes. So if you're new to trading, I suggest you go back and look at that so that you can have an understanding of what long squeezes and short squeezes are and how they set up and where and when they set up. But truthfully, a long squeeze occurs when a stock or any other instrument falls rapidly and unexpectedly lower in price. What this does is it forces long sellers to exit their positions so to avoid greater losses, which means that they have to flip their position. Okay, if they have been a buyer, if they've been long in the market, they now have to effectively sell to cover their positions. So not only are the bears in control, but the once were bulls, okay, the once were buyers, they have now got to become sellers. And all that does is it adds to the downward pressure, forcing prices even lower. So when we see a long squeeze, they can happen very, very quickly, okay, and they can drop very, very swiftly, okay, very swiftly indeed. And the sort of the first time you see that, you might actually not understand it. You might actually just think that something's gone on and you've not seen it, and you just see how a market has collapsed very, very swiftly. It's sometimes with just a little bit of experience and understanding, okay, and with a little bit of practice, you start to be able to read and see and understand what has actually happened, what was going on beforehand, and to recognize, there was a bit of a long squeeze going on here. And my assistant there, as always, has helped. Ketty has helped enormously there, has actually just put in the link there in the chat box for the video about the short squeeze. So you now have access to both, okay, to the opportunity to learn about squeezes and add that to your sort of your armory of how to engage with markets. And we can just look at this chart. We're going to look at lots of charts here today because that's what happens when we talk about squeezes. But you can pretty much see that it doesn't really matter what instrument this was. That's why I've cut the instrument off. It doesn't really matter too much about the instrument. The time frame is because what we're looking for is the kind of the short, the long squeeze in terms of the very short, very aggressive collapse in prices, and you can most definitely see that here, okay, hasn't it? Having been in a really very nice uptrend, price fell, and not only did it fall, it fell deeply, it fell swiftly. Okay, there was not really any pullbacks there, okay, until it actually had come pretty much all the way down to the 200 period moving average, you can see there. But between there, that was a very short, sharp shock, okay, in terms of the shorting markets. Now, if you were if you were on the sidelines waiting to short, well, then of course you're probably very, very happy. But if you'd been a buyer all the way up, all right, well, then invariably what you've got to do is, it says in your long squeezes, it forces the long sellers to exit their positions because they want to avoid greater losses, which means they're selling the market. So you've now switched the market, switching from being all the buyers in control to now the bears, the sellers are in control, okay? And that switch can happen very, very fast. So, now that we have a bit of an idea of what a long squeeze is, part of it is about trying to understand, well, why does it happen? Okay, well, what's the story? What's going on? And it does help, as always, to understand what is going on in that underlying market. So long squeezes happen when long sellers are being squeezed out of their positions. Normally at a loss, not always, but normally at a loss, okay? Because very often it's people who have bought in right at the top. So, maybe there's buyers here, okay? They've been buying, thinking, they have finally got off the sidelines and they've been a buyer, okay? Only for it within a couple of sessions, okay, for price to actually already be, very significantly against them. Okay, so they're being squeezed. They're now sat on losing positions. They don't want to take any more losing positions because they're thinking, this could go, this could go worse. This could be a long squeeze in play. So long sellers are closing positions in instruments that they think will now decline in price. As I said, it's a complete switch. Okay, a complete 180 switch from being, in one case, the buyers all in control, to basically now we have the sellers in control. The bears are rampaging and the bulls have run for cover. And for whatever reason, there is a turnaround in the price rise, okay? Every selling transaction sends the price lower, forcing long sellers to cover their positions to stem their losses. And that is an interesting point, as in, for whatever reason, there is a turnaround in the price. Sometimes that reason for the turnaround will be very, very clear, okay? But equally, you have to also be aware that sometimes, okay, the reason for that short, sharp turnaround, it might not be apparent until after the event. That is possible. Welcome to financial markets, okay? That's the challenge. If you wait till you have every piece of data and information to confirm a move, by the time you do that, the move's not only happened, all right? More often than not, the move has already happened. What it, as I said at the start, is about having a little bit of practice, a little bit of understanding, starting to look for areas where there might possibly traps that set, long squeeze traps set, so that you're in a position to sort of maneuver yourself, okay? Maybe if you're already in a long position, well, maybe you lighten it up, okay, or tighten your trailing stop. If you've been sat on the sidelines, well, actually, maybe you just wait to see how market reacts at areas where long squeeze traps may be set, so that you're in a position to, if there isn't a long squeeze, well, then maybe you want to continue with that long trade. However, if the long squeeze is triggered, well, then maybe that provides you an opportunity to be a very opportunistic short seller in that particular moment. It's about starting to just understand, okay, sometimes there will be very good reasons, or it'll be quite obvious why there is a turnaround in price. Other times, there will not be, and it will happen very quickly and very swiftly, and you'll be trying to work out what has actually happened. As we've always said here, okay, in the Trading Spotlight webinar series, managing risk is always first and foremost, okay? For you to be a good, long-term profitable trader, you have to manage risk. And so if you are in a position and you start to see a long squeeze occur and building, you're not really sure why, what we always say is that, it's cash is king, okay? When fear reigns, cash is king, okay? You always have to manage risk first and foremost. That is the key element, okay? That's the key element to understand. And it does, as I said, doesn't matter whether you've been trading for 2 weeks or 2 decades. You'll find all the good traders are always managing risk, and they're always sensitive to understanding the kind of market environment and how it might be changing. And if it is changing, is it changing, very aggressively and very swiftly? So, with that in mind, how do we recognize, okay, a possible long squeeze is occurring? Well, as I said, it does take a bit of practice. It takes a little bit of understanding, and as with all these things, the more you practice, the quicker you will understand it and grasp it. But what you will find is that, active traders are aware of any particular relevant news items. They might also be aware of the overall sentiment for that particular instrument, all right? And also, if there are any particular suitable technical levels. And what this does is it allows them to identify possible points for a squeeze to occur, and also the price action that may transmit a squeeze will occur. What does that actually mean? Well, sometimes a long squeeze can occur on news. Market might have been moving up very, very nicely in a very nice uptrend, okay, a nice bullish trend, but we're running into a particular news item. Maybe it's a formal piece of news, okay? Something that is on the economic calendar, maybe an NFP or an interest rate decision that is changed, that is different, and effectively that changes the sentiment. Or alternatively, maybe it's an informal news, something that has just come out of the ether, okay? Something's happened. Maybe there's been a geopolitical event, okay? Maybe there has been a global event in terms of something like a tsunami or an earthquake, okay? Or maybe there's just been a change in terms of regulation, okay? That's something that has majorly happened. That will have an impact on overall sentiment. The sentiment can change from bullish to bearish very, very rapidly. But also, they're aware of suitable technical levels. And, we've talked about this, on Trading Spotlight and in other webinars for Admiral Markets, is that we talk about, when you start and look at any charts, it's important for you to draw in and be aware of the main long-term technical levels of support and resistance, and also the kind of big round psychological numbers, okay, the double zeros, the treble zero numbers, because they in themselves can be areas and levels at which a long squeeze might be triggered. And, if you stay with us, what we'll do is I'll show you a couple of examples of that later on the live markets, where you can see, and hopefully that will help you sort of just try and understand. So, as I said, active traders are aware of news items, sentiment, and suitable technical levels, okay? And they are also aware of the price action that might trigger, okay? That might possibly just trigger, okay, that long squeeze into occurring, or give you a heads up that it is occurring. So you're in a position to either A, get out of your long positions, or B, come off the sidelines and be ready to sort of aggressively short into that particular trading opportunity. So, if you're a very new trader and you don't really fully understand the price action, well, we're going to touch upon, I'll talk about a couple of examples here, but what you will find is, in the webinar archive, you'll find some great opportunities, okay, in terms of webinars and videos on various types of price action, also about bear markets, about shorting markets. You'll see my colleagues, Marcus and Jens, they put in some great webinars as well. And so what you can do is that you're able to sort of look through that and just build your knowledge and understanding of price action, and then realize and understand price action at particular technical levels, okay, areas of interest where long squeezes might possibly occur. So here's an example, okay? So, let's just move these around so we can have a little draw on here. So, what we're talking about here, this is the Dow Jones Daily, okay? The Dow Jones Daily, and this is just from earlier this year. And, you can be very clear that, we had a very long, and sustained uptrend, okay, in most of, well, in fact, pretty much all of the US indices. Well, what we had here was, okay, is, earlier on in at the start of the year, price pushed to, at what was that point, okay, an all-time high before drifting away, okay, and it looked like we were going to. But, the 50 period moving average, okay, once again acted as a semblance of support. And what happened here is price pushed through that recent high, okay? Price pushed through that recent high, pushed through the 29,000 level, okay, and it started to break out once again to new highs, which then effectively suckers in lots of people who are late to the party, all right? We talk about, in trading terms, we talk about, it's thinking about it in terms of, going to the party, okay, and when you're going to a party, okay, you never want to be the first person to the party, but equally you never want to be the last person at the party, okay? There's a window, there's a good window for arriving at parties, okay? There's a good window where you can go in and everybody's in a good mood. There's lots of punch and drink to enjoy yourself, okay, and you have a fine old time, and then you leave, okay? If you're too early, nothing's happening. If you're too late, it's all happened, and it's not in a good way. It's the same with markets. People who are buying here into the kind of the break to the new highs, well, they were late to the party. They were late to the party. Now, in this particular case, we had broken to new highs. We were looking a bit like a false breakout. Then, of course, what we had is that we had back, if you remember, back in February, which seems it was less than 6 months ago, but it seems like a lifetime away based upon what we've gone through since then, is that then invariably, the fears of COVID striking the West, okay, in terms of Europe and the US, that started to gather pace, okay, that started to really get, become of interest, and people started to take it seriously because they hadn't been here beforehand. And then suddenly what we saw, as you can see there, is price stops making highs, okay, and actually price starts to consolidate there, okay. You were getting inside bar after inside bar after inside bar, okay. The market's had a big move, and now it's resting, and what we started to see is, well, actually we started to make lows. Then we made a bearish engulfing candle. Okay, not a great one, but the price range engulfed the preceding candle, and then invariably we closed here down beneath the 20 period moving average after spending most of the month above it. Okay, and then as you can see, the price changed and price sliced. Okay, price absolutely collapsed, and collapsed very, very swiftly, and suddenly we've gone from breaking 29,000 to actually breaking 25,000. Okay, we've in a matter of, what's that, okay, in a couple of weeks there, and especially in particularly a fair few days, we have dropped over 4,000 points, okay, on the Dow. So we've pushed to new highs, we've broken recent highs, pushed to new highs, and then the price action has stalled. Okay, it started to roll over, right? It started to not look terribly healthy, And then once the selling began, which was off the back of a news event, okay, not a formal news event, this was the start of the COVID fears. That was something that came out of you could call that a geopolitical event, okay. You could label it quite a few different ways, okay. But it wasn't. I wouldn't call it a black swan event, okay, because we'd known this had happened in China, so it wasn't a black swan event, okay. We knew that COVID was around, but actually what had happened is the market started to finally take it seriously, okay. They started to really grasp what was going to happen, and as you can see, then invariably that long squeeze. So people who had bought in here, or people who had bought in at towards the end of the party, suddenly they are very quickly and very swiftly, their positions are now underwater. And when that's happening, what they need to do is they need to get out, okay. They need to flip from being buyers to be sellers. And that's what happens now. This is when you start to see we have a couple of days there, as you can see. It's effectively 4 days there where that was literally just all selling, okay, pretty much all selling 4 days, bang, 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 okay. And that is just that's the, as I said, when you're on the right side of that, that's fantastic. But if you're on the wrong side, as I said, if you were a late buyer to the party, you're in pain and you want to get out, and you'll get out at any price. Okay, so when, as I said, when we see prices, okay, after a good long uptrends, after we see it breaking to new highs, okay, might be new recent highs or new all-time highs. Well, then what we want to do is to start to look at some of the price action. See, is that price action confirming, okay, that we are still in a bullish trend, that there's still bullish sentiment? If it's not, and we start to see the price looking as if it's about to roll over, well, you just have to be aware, well, there is a possibility that a long squeeze might be occurring. And as you can see there, if it does occur, well, of course, you don't want to be on the wrong side of that. That's not a good place to be. And this is one from a sort of similar time. Just have a little sip of water here. And this is, excuse me, this is the weekly chart here. And this is ASX, okay, the Australian Stock Index. So it's a weekly chart, remember, ladies and gentlemen. So if we, I'm just going to start here at the end of 2018, okay, and what we have here at the 200 period moving average, we had a big weekly bullish engulfing candle, and then as we rode into 2019, well, you can see price was moving up very, very nicely indeed. We had a new high here with a bit of a rejection candle, which then price dropped, and people were worried, but actually, as you can see, it continued to move up, okay? Continued to just grind its way up. And what actually happened was, as we can see, at the start of this year, on the weekly, we broke the highs of 2019, and it was quite bullish. But then we had a rejection candle. Price came down, price tried to push again, okay, to these highs, but once again, it gave us a rejection candle on the weekly chart, okay? So what we're seeing is effectively, price has been grinding its way north. It's pushing to new highs, but when it's pushing to new highs, it's then forming rejection candles. This is, so the price action is giving us a hint that, that maybe the bullishness that we've seen, okay, isn't all there. Maybe the bulls are running out of energy. The long trend, the bullish trend is running out of momentum. And I said, once again, okay, it's a case of recognizing that, this early this year, sentiment started to shift in the Pacific. Remember when, as China started to, announce, okay, that invariably what was going on with COVID, well, then invariably that had a huge knock-on impact. Okay, Australia is hugely closely, in terms of Australian financial markets, hugely, strongly, closely aligned with China. So anything bad that goes on with China is going to have a blowback effect upon Australian and other Pacific economies. And you can see there on this weekly chart, okay, that once again, as COVID became, became the sort of the number one story, okay, in terms of financial markets. Well, that was 1 week's chart there, okay. You can see that was an absolute immense price collapse, and people who probably bought, okay, here at the second half of 2019, people who bought the breakout to new highs, okay, they probably bought here. They are now deeply underwater. So what do they need to do? They want to get out of their positions. They want to cut their losses. They don't want to take any more losses. So they have to flip from being a buyer. Suddenly they have to be a seller along with all the other sellers. everybody's trying to rush for the exit. Everybody's trying to get out and, get out of the market. And as you can see, we had 1 week, 2 week, 3 week, 4 week, 5 weeks. Okay, within about 6 weeks. Okay, within about 6 weeks from hitting highs at around about, let's just say 7,200. Well, we were down here at about 4,400. That's it was just a absolutely immense collapse there. Okay, an absolutely immense collapse in the ASX there. Okay, so you've got, as I said, once again, you've got, a few things coming together. Okay. You've got, price in a good uptrend, price breaking to new highs, but price action not exactly confirming, okay, new highs. Then you also have, we had in this take, a geopolitical event, the kind of surge of contagion of COVID throughout, both the world and financial markets. All of those elements coming together at that particular time at the start of 2020, and markets, you can see for yourself, they absolutely collapsed. And we're looking here at daily and weekly charts, okay, because it's relevant. Okay, you've lived through this year. Okay, wherever you're joining us here today. Okay, I appreciate we have a wide range of traders from from a truly global audience, but we have in some ways lived through elements of this in 2020. Okay, and now you start to maybe recognize and see what happened. Okay, and just realize that there was a huge long squeeze going on. People needed to get out. They needed to get out of their long positions because the market was falling so fast. And of course, as they flip to being from being longs to short sellers, well, then that just adds. It's like from what was like a trickle, it becomes suddenly like a waterfall almost, in terms of everybody just trying to run for the exit and get out of position. So what we're looking at. So Robert says there's some long wicks on the down legs. Yep, there were some long wicks. There would have been little bits of pullbacks, but actually that's what we're talking about. Okay, in terms of there's always going to be elements of pullbacks, but in terms of indications, all right, of what's actually going on. Well, what we're looking at is just trying to be able to understand what is actually. Let's just clear some of these drawers. What's actually going on here? Okay, that's what we're looking for. Okay, as I've said, just start to wait to is there a good trend in place? Is price breaking, okay, particular recent highs or all-time highs? Start to looking at, okay, what are we seeing in terms of the actual price action? Are we starting to see bearish price action, rejection candles of some sort, and then followed through by actually price starting to sort of fall away, roll over, momentum dropping away? If you use indicators, perhaps you might see some particular divergence, and that is absolutely perfectly possible. But today, as an introduction to long squeezes, what we want to do is to basically be able to just give you, an opportunity to start to recognize, to see when they occur, so that they move from being a threat for you towards, as you practice and watch and view them, for them to becoming a particular bit of an opportunity. So when it comes to trading a long squeeze, there's a few things that we want you to be aware of. Correctly timing a long squeeze can be a very lucrative opportunity, but as with all things with timing, trading, timing is a challenge. And as I said, it can be a case of you might be a little bit late to that part to understand. That's okay. All right, as you practice and you start to get better at reading and understanding the market and being able to sort of fuse that information in terms of what you're seeing, particular levels, particular news, particular price action. Okay, as you start to sort of bring that together, you will increase in your ability to understand and actually time how to sort of turn this from a threat into an opportunity. But it does require a sound trading method to ensure that you can prosper from trading long squeezes. As always, when you're trading this, remember, with high reward comes higher risk. Okay, and that's something that you have to be aware of. And your first and foremost part is all about managing risk, and which does make timing becomes important. Okay, and recognizing the correct price action to identify the squeeze as quickly as possible. So in this particular example here, well, you can see that after price has been in a particularly nice uptrend, well, what we actually see here is price price prints, okay? Price prints a bearish engulfing candle, right? As prices continued, okay, to make new highs, we then see price action sort of generating a bearish engulfing candle, okay? So that is, it is that in itself is a trigger. But what we'd like to see is, has it come at the end of a long trend? Have we been breaking to new highs, recent highs? Are we at a particular level, okay, whether that be a significant support resistance level or particular significant resistance level, or a particular psychological round number that actually allows you to effectively sort of see this confluence of events. And that's what we've talked about in lots of the sort of the trading opportunities we've talked about. We're looking at and preferring a particular confluence of events, starting to see 3 or 4 things come together at one particular point that will actually allow you to make the to sort of turn it from a threat into an opportunity. So, in conclusion, ladies and gentlemen, a long squeeze occurs when an instrument's share price, okay, falls rapidly due to long covering, okay? Long sellers will cover their position to stem deeper losses. They're forced to sell the market to cover their longs, which in itself drives prices lower. Good contrarian traders will look for opportunities to profit from squeezes that are setting up. And remember, that's where we're looking at ensuring that we can see that there has been a good trend, prices breaking to sort of new highs, new recent highs, new all-time highs. We're at, as I said, at particular levels that are of interest, and where we start to see price action that is almost like the kind of final nail in the coffin. Once we start to see sort of bearish price action, okay, whether that be things like engulfing candles, whether it be key reversals, which we'll look at in a moment on the live charts, that is what starts to give us the opportunity. As always, timing is in key is to ensuring that you sort of achieve a good reward to risk. And that's another element of it, okay, that we're looking for in terms of not only are we managing risk, but, we want to be able to sort of try and achieve good reward to risk. And that's what we're looking at, 2 and above, okay, asymmetric reward to risk. We're looking for whatever we're looking to risk on a trade, we would be looking to sort of actually generate at least 2, perhaps preferably even 3, 4, or 5 in terms of our reward to risk. And you have to treat it as a short-term trade. This is not a trade that you are going to be holding for months and years, okay? It's very unlikely. It's going to likely to be a short-term trade that you might hold for a few hours if you're a particularly short-term trader, but realistically, you might be holding it for a few days to a few weeks. These don't happen as often as we would like, although we have seen several in 2020 because we've had that confluence of events. Okay, we've had prices in good trends pushing to recent highs, all-time highs, okay, at significant levels, and then actually portraying bearish price action, rejection candles, key reversal candles, engulfing candles, all of the good stuff that we have covered in many of the previous webinars that we've had here on Trading Spotlight, okay? And as I always say, there is an awful lot of great material in the webinar archives that would allow you to basically understand, price action in terms of rejection candles, engulfing candles, inside bars, key reversals, and star formations, all of which are enormously valid triggers, okay, for when there might be the start of a long squeeze occurring. And as I said, sometimes the squeezes will occur, and you'll be able to see them. You'll be able to be prepared and ready for them. Sometimes they may just happen out of nowhere simply because of events that are going on in the markets that you might not know. There might be events, geopolitical events that are happening, maybe an earthquake, maybe a particular behind the sort of in the back scene sort of a deal being done, which you might see at sort of G10 meetings that you would not be aware of. Okay, and that's where you start to look at reading and understanding the particular price action. So as always, it makes it a little bit easier if we have a look at a few of the charts. Okay, that actually helps to put things into idea, to start to get an idea of when we start to see these long squeezes may actually occur for you. As always, you might want to sort of gain more support. Okay, we appreciate that when you're trading here, trading from home. Okay, it can sometimes be a bit of a lonesome endeavor, and actually being able to sort of engage with and talk with other traders can actually help you. And so, in that case, you're very welcome to join us on the Trading Spotlight community on Traders Yard. I'll be here this afternoon, and you can join us there. Okay, on the Trading Spotlight group, tradersyard.com/group/312. And as I said, I'll be in there for the remainder of the afternoon, and you'd be very welcome to sort of come and join us there and discuss. And and if you've got particular trading questions, we're always happy to help. And you'll see my colleagues Marcus and Jens; they post some fantastic stuff up there every day that you can enjoy. Which leads us on to don't forget to join us for the next Trading Spotlight webinar session, which is on Wednesday afternoon, 2nd of September, 2 o'clock London time, where my colleague Mark is going to talk about how to invest in stocks. Okay, and he'll cover such things as why invest in stocks, what are the kind of strategies that you can use, and how you can go about it. If you check your email inbox, you should already have the webinar link for it, or alternatively, you can have a look on the admiralmarkets.com website on the education heading and find and sign up for the Trading Spotlight series. And you'll find there is plenty of analysis, education, and resources on the admiralmarkets.com website. As always, if you want to contact us, you can do. You can email global@admiralmarkets.com, or you can watch this video or many of the other elements on the Trading Spotlight webinar archive on youtube.com/admiralmarkets. And you can also join us and watch us on facebook.com/admiralmarketsglobal. So I hope you found that useful, ladies and gentlemen. I hope that's given you a little bit of insight and an introduction into understanding what a long squeeze is, okay, where and why it occurs, and how you can sort of look out to sort of either A, just stop it from being a risk to you, or B, as you gain and develop in your own trading skills, how you can start to turn and use it to as an opportunity for yourself. We've got a few minutes left, so what we'll do is, we'll switch across to the live chart. So if you just bear with us, we'll switch across, have a little look at some elements that set up this year, so you can just have an understanding and see how it plays out and develops in live markets. So if you just bear with us a minute, we'll switch across to the charts. Okay, so hopefully you can still all see me. Hopefully you can hear my voice. So let's have a little look at something perhaps a little bit different. Okay, so what have I got here? What I've got here is a profile. Okay, this is on my Admiral Market MT4 platform. It is on commodities. And I thought, well, we'll just have a little look at one or two of the elements that we've seen, and we could have a look at one or two different instruments. So in particular, let's just have a little start with gold here. Okay, so most of you will have been watching gold. Here is gold on the daily chart. And just as an example here, let's just bring up the sort of the cursor. We can also have our drawing tool. As I said, this is gold on the daily chart. I mean, gold has, up until the sort of start of August, been in an absolute tear, but we can see when we've had long squeezes occurring before. Back here at the start of this year, okay, daily chart was pushing to new highs, and we had a rejection away, and then price tried to push up again. Okay, price tried to push up and break the recent highs. It also hit this big significant round number of 1700 before actually it fell away, and it fell away very, very quickly. You can see there for yourself. Okay, once again, that was a little bit of an element of linked to the COVID. We tried to push to a new high, hit a significant level. Okay, we've been in an uptrend. Okay, we tried to break recent highs, we pushed into a significant level of resistance, and price fell away very rapidly. Now, on the daily chart here, there wasn't really, in the sort of the first day or two, but there wasn't really any particular price action that might have alerted to you. Then you might have seen a sort of rejection candle, but it's, if you'd have gone down into shorter time frames, maybe 4-hour charts, you might have seen a difference there. But what we saw is repeated, okay, is, and many of you might have watched and seen, we've done a few sessions on gold, is that here during July, okay, we started to just race away, okay. Price was rallying away, racing away there. You can see for yourself. And what we had happen was, price was basically hitting, let's just put in, let's just draw in some significant levels, okay. So, we had price, going to highs that have not been seen, okay, highs that have not been seen. Even if I just go out to the monthly chart there very quickly, you can see for yourself, okay, price, broke those kind of highs of 2000 level, right? So just remember what I was saying earlier, okay, price has been in an uptrend, okay, it is breaking significant recent highs and all-time highs for here, at significant levels, which was the sort of $2,000, okay, 2000 big round number, and price pushes up, and then what do we have here? But we have effectively an engulfing candle, okay, a bearish engulfing candle. So we've had good uptrend, break of recent highs, break of all-time highs at significant level of resistance, that $2,000, followed by, okay, a bearish engulfing, okay, price action trigger there, followed by a sort of an inside bar. So you have an engulfing bar, followed by an inside bar, followed by a real collapse in price. And we had a collapse in price there from about 2025 down to 1866, okay, there. So we had, a significant, okay, just under, $200 move there, right? So it was a significant move drop down, okay. There was a long squeeze occurred in there, okay. There was lots of people who probably were buying, okay, buying when it broke through the recent highs, buying when it broke 2000, okay. They were the last people to the party, all right, last people to the party, which then followed by very aggressive, okay, a bearish rejection in the sense of a bearish engulfing candle following in by an inside bar, and then price absolutely collapsed. And you can see price tried to rally back up to 2000, but it couldn't hold and has fallen away as well there. If we look at, let's have a little look at platinum, shall we, as well? Okay, platinum, this is platinum on the daily chart here. And just, we'll have a look here on the daily chart is, let's just bring on the old drawing tool. What we can see here is, we've got this significant level of, 1,000, okay, $1,000, okay, on for an ounce of platinum. And we can see that, back in September 2019, okay, price had a very strong rally up there, okay, before putting in a bearish engulfing candle and dropping away. Price then came back up and put in another uptrend here, and actually it broke 1,000 and actually went up to a significant resistance level at 1,028. But you can see for yourself there, having tried to push up there, we had a rejection candle, okay, before price dropped away again. Then price tried once more back up to the kind of 1,000 level, okay, significant level. Remember I was saying uptrend, breaking highs, significant level, before price reversed and rolled away. And this time, along with the kind of the rest of the COVID elements that we saw a real significant drop, okay, a real very, very aggressive and harsh long squeeze occur. What we've seen is, if you notice, you might want to keep an eye on here, is, once again, okay, we tried to push up, okay, to hit that 1,000 level, okay, that big round significant number, and then we actually, once again, okay, we printed a bearish engulfing candle, and we can see that price has drifted away and fallen away from it there. So, clearly, that 1,000 level is a significant number in platinum. It's something worth watching, because of course, invariably, you're going to be interested to see how price responds when it actually moves there. Just looking at here, just have for the last moment or so, just very quickly have a quick look at one or two of the indices. Let's have a look at, we looked at Dow, we had a little look at the ASX, maybe have a look at the Nikkei, Japanese one, 2000, sorry, the Japanese 225, apologies. And, we can see prices pushed up, and then it fell away, okay? But then price tried to push up again, okay, in 2018, and, hit a significant resistance level, okay, where previous price action had been, and then it printed here on the weekly chart what's known as a bearish key reversal. Price pushed to new highs, but closed lower than the previous candle before price fell away, okay? There was a long squeeze occurring there. What we saw is price push up here, okay, running into the start of this year. And what we saw here was a kind of an M pattern, a double top, okay, pattern before, and in fact, you might even say it was a triple top before we had a couple of rejection candles, and then price fell away once again. And we can see that price is, is edging its way back up there again. Okay. And so you're going to be interested to see, well, what will happen when price, if it does move up into here, will there be the opportunity for a reversal and a long squeeze to occur? So I would add that to your watch list. So there you go, ladies and gentlemen. I hope that's just given you a little bit of insight, a little bit of help to see what a long squeeze is, where and when they occur, what you can look out for, and how, using some just, bearish rejection candles, bearish engulfing candles, key reversal candles, you can start to sort of turn it from being a threat to an opportunity. As always, I wish you the best success with your own trading, ladies and gentlemen. I joined my colleague Marcus on Wednesday. I said I'll be in Trader's Yard this afternoon. If you have any other questions, and I look forward to speaking to you next Monday, traders. Trade well, everybody. Cheers.